Tesla, as of late, delivered its Q4 creation and conveyance numbers, and a ton of examination has portrayed it as a missing that Tesla didn't meet the agreement of venture companies like Money Road anyway. I admit Brett Winton appears to concur with this. As per him, the vehicle organization's Q4 conveyances are not a miss, since Tesla conveyed €40 VA development against a market that is expecting right around an 8K. He accepts that EVs will rule the vehicle market in the following 5 years, and afterward, in 2027, there will be 60 million electric vehicles sold with Tesla, delivering a huge level of this figure. Hello everybody, invite back to Tesla tomorrow. Tesla's stock price decline last year was generally determined by the disliked activities of Elon Musk. The vehicle organization, likewise confronted regardless, faces worries with the interest for its vehicles. A few financial backers accept that interest is dropping, particularly for the urgent Chinese market, following ensuing cost cuts for its EVs in this area, as well as in other EV markets for Tesla. But is there actually an interest issue for the vehicle organization? How about we find out yet before we do? In the event that you like this kind of satisfaction, remember to like, buy in, and ring that notice chime to push exceptional on everything along on with Tesla. In the final quarter of 2022, Tesla delivered north of 439,000 vehicles and conveyed north of 405,000 vehicles. As per the vehicle organization, in this year, vehicle conveyances grew long-term over year to 1.31 million, while creation grew long-term over year to 1.37 million anyway. An agreement of examination gauges gathered by FactSet expressed that Money Road was anticipating that Tesla should report conveyances around 427,000 for the last quarter of the year. Different appraisals refreshed in December and incorporated the FactSet agreement, and they likewise went from 409 to 433,000. Following the arrival of Tesla's Q4 creation and conveyance numbers, a few hosts have guaranteed that the downfall in interest in Tesla vehicles is turning out to be more obvious anyway. Brett Winton, who is the head of exploration at Circular Segment Speculation, the board has expressed that, as opposed to miss Tesla's Q4 numbers, their Q4 numbers are earth-shattering, and he added that with higher creation rates in the following quarters, this could spike the stock price to go as high as $400 this year. Tesla had a record-breaking Q4 in spite of the drop underway at its Shanghai production line in China. The vehicle organization suspended creation at its Shanghai plant in December as per an inner notification, carrying ahead a past intention to stop most work at that plant somewhat recently of the year, in spite of the fact that Tesla didn't give a justification for the declaration. It had dropped a morning shift at the manufacturing plant, telling laborers they could begin their break. Jiga Shanghai is Tesla's most useful assembly center, and even turned into Tesla's double-dealing center as the automaker produces vehicles for global business sectors, particularly in Europe and Asia, so a stop underway would have fundamentally impacted creation in the last quarter of 2022 had this not occurred. Conveyance numbers would have expanded, and Tesla would have likely recorded up to 50% growth year over year. Tesla additionally arranged to run a discounted creation plan at its Shanghai plant in January, broadening the discounted yield it started in December. The vehicle organization's February numbers in China are out, and it affirms that the Gigafactory in Shanghai is keeping a fantastic result of in excess of 600,000 electric vehicles each year anyway. Brett Winton accepts that whether Tesla hits its development target is a component of creation and not a request. Presumably, Tesla's interest might be dropping since EV purchasers may yet reason that their choice to purchase is because of tax reductions on a portion of their vehicles. Yet, this will ultimately pass considering the few cost cuts that Tesla is making in the majority of its business sectors. So, as opposed to hanging tight for another motivator or for Tesla vehicles to qualify, it very well may be less expensive to purchase the vehicle attributable to the decrease in cost. Tesla vehicle conveyances address just a single proportion of the organization's monetary exhibition and ought not be relied on as a sign of quarterly monetary outcomes that rely upon an assortment of elements like the expense of deals, unfamiliar trade, and a blend of straightforwardly rented vehicles. As per Winton, Tesla is no less than 3 to 4 years ahead of the business in driving change to EV, and the vehicle organization will really keep on driving down cost as they increment creation. They're likewise going to be delivering new models and items in the ensuing years, so sooner rather than later, Tesla might have the option to sell each vehicle and item that it fabricates. The automaker is likewise set to deliver another vehicle stage worth about a portion of the cost of the Model 3. There's a ton of fervor about the new stage, and it's supposed to be a 25,000 EV, albeit the venture has been deferred and may not show up for the following 2 or 3 years, does it seem, by all accounts, to be coming. And at Tesla's Q3 profit bring in October of last year, Musk unveiled that the cutting-edge stage will be a portion of the expense of the ongoing Model 3 and I stage. Musk additionally guaranteed that creation volumes for this vehicle will enormously outperform that of the Model 3 and Y, and will go a long ways past some other Tesla vehicle fabricating amounts yet together. He additionally added that he will tackle the maximum capacity creation improvements like Gigapress, which projects enormous skeleton segments in a single piece. While it's as yet hazy when the EV will be set for creation, Tesla is now getting ready for itself, and the automaker has, as of late, declared that it will hold another financial backer day on the 1st of spring. This is where it will examine the new vehicle stage. Tesla expounded on the occasion in a public statement, expressing that it intends to have its 2023 financial backer day soon, and that the occasion will be live gushed from its Gigafactory in Texas, with the choice for a portion of its institutional and retail financial backers to go face-to-face as per the vehicle organization. As per the vehicle organization, its financial backers will actually want to see its most developed creation line, as well as examine long-haul extension plans. Age 3 stage, capital distribution and different subjects with Tesla's initiative group. The automaker additionally added that it would discuss capital designation during the financial backer day, and could likewise incorporate the stock buyback program that Musk initially reported in October. Brett Winton trusts that in the event that Tesla can effectively deliver this minimally expensive EV, that it will by turn into the norm for the EV market. The Tesla Ball had recently given his interpretation of advancement and how this can be a monstrous edge for organizations. He additionally pointed towards the similitudes between development now and the developing business sector. Speculations went and referred to that there is a ton to anticipate from Tesla before very long, and these might actually build the vehicle organization's interest, and over the long haul, its stock cost. He especially anticipates that on the off chance that Tesla can accomplish full self-driving, then that will be tremendous for the automaker's previous money road examination. And Tesla bull Gary Dark additionally accepts Tesla's stock is right now underestimated by him. The ongoing commotion isn't influencing Tesla as a business yet, but rather the organization's stock and the apprehension about requests to climb, particularly because of value cuts in a few business sectors, as well as the response of Tesla stock going up, caused a few financial backers to lose trust in the vehicle organization. Yet there is still a ton of progress that is not out of the ordinary. Before long, Tesla will post its monetary outcomes for the final quarter and entire year, which finished in December, and the secondary market closes on the 25th of January 2023. Its net gain and income results will likewise be reported close by the remainder of its monetary presentation, so financial backers should keep their expectations alive, particularly since Tesla is still in its initial years anyway. While it is bullish to expect expanded creation for Tesla before very long, it is likewise essential to take note of that the ongoing drop in Tesla's interest may not be completely misleading, as the vehicle organization is reasonable going to club creation in China, one of the greatest business sectors worldwide. Tesla has kept on changing towards a much more local blend of vehicle constructs, which has prompted a further expansion in vehicles on the way toward the finish of the quarter with the impending enhancements. Tesla could before long push creation to north of 1 million units each year at its Shanghai plant, regardless of late difficulties, and record significantly higher creation rates, generally speaking, because of the increase across production lines. Universally, but do you likewise share similar considerations? Let us know down below. And remember to let us know your assessment of Tesla. If you have any desire to know more about what Tesla's been doing over the most recent couple of days, feel free to tap on this next video on your screen. See you there.